Hey, what is going on? It is Crypto Bobby. Hope you are having a great day, great night, wherever you're watching or listening in from. I had a special chance to sit down in New York at the Block's headquarters for Nathaniel Whittemore's Long Read Live. If you don't follow Nathaniel on Twitter, I will link to his Twitter below, but he is one of the better follows in the crypto landscape. Very unbiased content, puts out one of the better summations of the weekly activities in the crypto landscape, and has turned that Twitter storm that is very well respected in the industry into a weekly video. And I got a chance to sit down. It was one part of a segment, so I linked to the entire episode below, but I got a chance to hang out with Greg Rocco, Frank Chaparro, formerly from Business Insider, now at The Block, a number of other people that I think you'll really like. So wanted to cut up the video and put it here so you guys had a chance to see that content if you didn't follow Nathaniel on Twitter and YouTube already. Again, I'll link to all his information below, but had a really great time at The Block's headquarters filming this. So without further ado, let's get to it.
Oh my God, look it's everyone.
The whole crew.
We got a whole crew. Hey, hello, fellas. Can you do a little introduction?
Oh, Rob?
Yeah, sure. My name is Rob Payon. I am on Twitter and YouTube as Crypto Bobby. Work full-time at AirSwap in the space as well. So, yeah, quick intro.
Awesome.
Frank Chaparro, also known as Frankie Scoops, which was sort of started by
I'm going to take full credit for
Yeah,
that.
he really is the one that
I
started
named
that
you
trend.
Frankie Scoops.
Truly did. After the Block leading some editorial stuff and breaking news.
All right, so we've been talking about Tether. We've been talking about what this sort of phase means for just the emerging institutionalization of crypto. And so obviously today's big news that wasn't just the Tether peg going crazy was Fidelity. Frank, can you kind of do the recap for anyone who, I don't know, like was in the hospital today and didn't hear about this?
Or under a rock somewhere in
Yeah.
a country without electricity. What basically happened, and I think I'm in a good position to sort of talk about this story because I've been covering it since I was at FBI. I first wrote that Fidelity based off internal job ads I got back in early summer of 2018. They were looking to hire to build out technologies relating to a digital asset exchange, a digital asset trading, and custody solutions for Bitcoin and Ether. And so that was 5 months ago at this point. And so what they announced today was that they are launching essentially a new business called Fidelity Digital Assets, which will offer custody solutions for Ether and Bitcoin, as well as institutional broker services for hedge funds and family offices. And so what that means is essentially Fidelity's new unit will sit between asset managers that include hedge funds and family offices and the wild Bitcoin crypto market, right? Routing their orders to the best venues that they'll be connected to. So that was the news that broke around 12 o'clock today. Sat down with Tom Jessup, who is the now the head or the brains behind the operation for the full story, which you can check out at theblockcrypto.com.
And done. Perfect. Okay, so let's do a quick hot take on a scale of 0 to 10, 10 being most significant, 0 being whatever. How significant is the news?
So from my perspective, looking and talking to institutional type folks and thinking about what they want and a actual broker that has the institutional capabilities that they see in equity markets. So that's the plus side. That gives credence to what's going on here. To be sure, right? It's not a qualified custodian, so it doesn't have that designation that BitGo has, and I think Paxos and Gemini with their trust certification makes them a qualified custodian. So they're not there yet, but Fidelity is a huge name. They manage $2.5 trillion actively. And so when we think about a firm with that sort of name and that sort of cachet, that's a big deal. So I put it at like an 8. But it's early days, so it doesn't launch till next year. Things can happen that go wrong. People could leave. that's the thing that we have to remember. In crypto and on Wall Street, people like to announce things before they actually happen. But it is big news.
Speaking of announcing it before it happened, I heard that Fidelity has also inked a deal with Tron. He has Justin's son has a brokerage account with them, and it's a pretty big deal too.
We're still in the announcement. We're still in the announcement, towards the announcement phase of that partnership. Yeah.
All right, Bobby, what 0 to 10?
I was gonna say 8, so Frank under there.
He scooped you.
But yeah, I mean, I think yeah, he did scoop. I mean, I think if like the herd is actually coming, it is big news. I don't necessarily know if it is actually coming, but if everything that everybody kind of preaches that there needs to be a proper custodian, insurance, all that good stuff for these institutions that are like more legitimate institutions to enter the space. And yeah, I do think that like 8 out of 10 is probably like the range in terms of the quality of news, just being that the name that Fidelity has.
What about you guys? You're not you're qualified to talk about this too. I'm interested in everyone's thoughts on this.
I'm gonna give it less importance. I'm gonna give it a 7, only because I want to know more details about what their custodial solution is, and like whether they're building it, whether they're going to co-opt or adopt or buy something that already exists in the ecosystem. Like that unknown piece for me, and how good the custody will actually be from a crypto. I mean, it's Fidelity; they have a whole lot of resources, so my guess is that it won't be good. But once the custody is actually live, then that's like where it becomes like an 8 or a 9.
At the end of the day, I mean, dovetailing off of that, it is still just Bitcoin and Ether. When you think about the average crypto hedge fund or the average family office investing in these, a lot of them are doing the top 50, top 80 coins. And so this doesn't move the needle for them as far as being able to just focus on the investment part as opposed to focusing about the investment part and how do I safeguard these assets.
I mean, I agree with all they said pretty much. I think it's like a 6 or 7. But I think it's important. It's a really big company getting in, and then if they can pull this off, it's going to be really important. I'm not sure if they can 100% exit with all of it. I think it's important for sure.
I think personally, I'll stick to the 7 as well, just for the institutional narrative.
So one of the most interesting tweets that I saw about this was Hasu wrote, last bull market was retail trying to front run institutional money. Next time it may be the other way around, which I thought was super interesting. There's kind of this gamesmanship almost where, actually I think Ryan Selkis from Masari today, when they set out their unqualified opinions about it, he said, he kind of closed it with this like running joke since 2013 that whatever that year is +1 is going to be the year that institutional money comes in, and hey, maybe this time it's actually the real thing. And so one of the things that I think is interesting is how much this throughout even actually last year, part of the huge explosion at the end of 2017 was the notion that there was going to be this big slew of institutional money coming in, and you wanted to get in before it, right? And so I guess that one of the things that's interesting is, just based on seeing the market's reaction today, like how reliant on this narrative of the institutional money coming in do you think that the space is right now? Like, is everyone still kind of just waiting for that to happen? Or is more or less everyone just building whatever they're going to build, and that's going to happen and be a force at some point, but it is what it is?
I mean, I kind of said this not too long ago with Anthony Pompliano, and that is, listen, at the end of the day, when Bitcoin ran up to 20,000 after the launch of futures, everyone thought that we had vehicles for retail investors to enter the market, like an ETF or other derivative products that would just launch next day. And obviously that didn't happen because the market participants weren't ready. But even if you have those sort of on-ramps, even if you have things like Fidelity announcing custody or Fidelity announcing brokerage services, if the space doesn't have an investable sort of proposition, right? If you don't have apps that can facilitate active users that top 10,000 people, I mean, I don't know the exact, I think it's a day or a month for Ethereum-based applications. It's the equivalent of having, an amusement park that says, all right, now we have online tickets, but, we only have 3 rides. So even if you have online tickets, no one's going to want to go to that amusement park, in a sense.
Thank you. Well, but I mean, if you think of like what the institutions will invest in, I mean, they might only offer Bitcoin and Ether first, but when I think of at least a lot of the institutional investors I know, it's highly anecdotal. That's probably about where they're going to start and hang out there for a while. Because I think that people have this binary they've assigned like Bitcoin and ETH good, everything else bad, because they don't know how to differentiate.
Or scary.
Scary. To lose all my money, and then they lump in all of these other projects with like the ERC20 boom, which is also conflating that it's crypto and everything's highly correlated. So of course people assume that,
And it is very highly correlated. So that makes sense.
What do you guys think of? So one of the things that's been interesting is that obviously the sort of permission enterprise blockchain narrative has been a total no-show for this whole year, right? Like we're over that. In a pretty big way. There's been this general institutional narrative, but it's been very concentrated around access to Bitcoin and Ether and premium assets, right? This sort of ETF type things. One of the things that I've actually been kind of surprised about from like a narrative perspective is how, and maybe this is just my impression, but it feels like the security token narrative, like outside of Bruce Fenton basically, has been on this low hum kind of going on in the background, but it hasn't really been at the center of the institutionalization conversation. Is that, I mean, am I off on that? Do you think that's true? Like, how much are you guys thinking about, I mean, basically like if you think that there's a big red A on top of all of the sort of ICO type tokens as it relates to institutional, is there a role for, a next generation of tokens that are more securities like to actually play a role in how institutionalization happens? Or is that so far beyond the core getting involved with Bitcoin, et cetera, that it's just not on people's radar right now?
I think the security token, industry or subset is pretty early. Personally, like we're looking at Bitcoin being 2009 when it was created. I think that's correct. I feel like we're at like 2010 for security tokens. Like the legitimate infrastructure right now is just starting to be built out. I think there are literally 2 compliant security tokens that will be able to be traded in the next month on a secondary market, and that's Spice VC and Blockchain Capital. So there's literally 2 that are compliant and will be able to be traded the next month. And then there's rolling out at the regulatory lockups. So I think we're super early on in that space, and I don't think we've necessarily hit like the narrative for like institutional investors and like the value proposition perfectly either. Like a lot of people are talking about like the secondary liquidity, like this is going to provide some type of liquidity premium, or it's just going to provide liquidity to illiquid assets. And we don't have any proof of that yet because there isn't anything necessarily trading on a secondary market. So I think that's an issue. And it's also 2 other things. Like number one, the quality of assets I think is improving slightly, but initially speaking, I think a lot of companies or a lot of like people in the past 6 months were just trying to like say, oh, this is a security token, but I'm going to tokenize some crappy asset. Like if it's actually backed by something, nobody's going to like, people can actually look at the documents and do due diligence on an asset and see it's subpar. So I think that is something like higher quality assets need to actually be the ones being tokenized for this. And I think that's starting to happen. But then also like institutions don't necessarily want to hold tokens. Some of them just might be more comfortable holding paper. So I don't necessarily think we're like there yet, but I think it is a trend that's going to continue like moving in the right direction, but it's still super early on.
Yeah, I mean, it's interesting that basically there is one of the interesting ironies of kind of the ICO boom could be that it turns out to have been better that institutions didn't get in and that we burned ourselves out through some of the kind of like the madness, so that we're not basically just trying to have security, STOs for everything that we push to institutions and burn them out for a full generation or something like that.
I wonder if you're going to see the rollover of interest from like what we talked about earlier with these futility tokens, converting to equity. I wonder if that will also bring, speculation to securities markets because these tokens are converting and in whatever way they're actually converting. If eventually, take Economy, for example, if all the utility token holders of Economy, once it gets converted to EICM, I think it's going to be the the ticker or something, and there's going to be, you know, an influx of interest now that they've converted their token and there's another security floating on the market, but it was formerly related to, you know, the speculation behind their quote-unquote utility token.
I personally have like a little bit of doubt that we'll see a lot of speculation on the security tokens, just because I think that when it does come to equity or real estate or whatever it might be, like there are professionals that can actually do due diligence and perform like accurate valuations on this stuff. So like there is no legitimate formula right now to value Bitcoin, to value Ethereum, to value any of these utility tokens regardless. Like there's no accepted industry standard. For a lot of these security token offerings, there's going to be some type of standard that is already in existence and in place. So I think logically speaking, although the industry, as we know, is not logical, so I think logically speaking, we will not see that level of speculation. At least I kind of hope we don't, but who knows?
I think, sorry. My one prediction with the security token market is we're going to see a wave of security tokens, and then we're going to see a wave of litigation because there's going to be a whole lot of people issuing crappy security tokens without really understanding that they now have a fiduciary duty to these people, and that they have to explain like where their money is going and provide dividends depending on the structure. And you know, equity is equity. Whether it's a tokenized equity, whether I literally have a sheet of paper in my closet that says I own a share of Google, whether it's, you know, there's different digital representations. It's still, you know, equity in a company. And so I think that there's going to be a lot of people who get on the STO bandwagon and realize all of a sudden people have legal recourse that they can't come out.
Yeah, you now have introduced accountability to an entire market that has never had accountability.
Yeah, which is maybe why people don't embrace it, or people do embrace it. They don't want to get sued because, you know, bad ideas. Like imagine if somebody could actually sue Tron.
I mean, I think what we'll see in that is actually very similar to what is going on in. So the 2012 Jobs Act by President Obama, which the whole point of was to make it easier for companies to tap the public markets through Reg A Plus, is actually not that different from what I imagine an STO sort of capital formation to look like. And all of those, I think about 12 have gone to market. So Reg A Plus is basically raise $50 million, less sort of reporting requirements, and a year ago, there was a lot of questions about how some of these companies were kind of scamming. There was one called Yayo, which was a ride-sharing app. I don't know if any of you guys have heard of it, but basically, for listeners who may not know, Yayo is slang for cocaine. So this was a ride-sharing app that had very...
Tell us more, right?
Well, no, so basically, the founder, we reported on this when I was at Business Insider, had a very interesting sort of background, but long story short, all these Regulation A plus fundraisers are down like double-digit %. And so at the end of the day, you can't get that liquidity premium. You could have, as a founder or as a company, an easier way to enter market, but that doesn't necessarily mean that it's going to be the investment opportunity that translates into higher alpha.
Yeah, it's interesting. One of the sort of, I mean, I think that like we're aware of it, but it hasn't been that loud. Kind of narratives that I think is so interesting is how much of the demand for ICOs had almost nothing to do with crypto and almost everything to do with the desire for people to have another mechanism by which that they could participate in these sort of like these massive opportunities to change their own financial or economic destiny, right? They've sort of been grown up with the narrative of Silicon Valley and these tech companies and things like that. And we had these crowdfunding things. And then, like to your point, Frank, some expansion of what equity crowdfunding could do under Obama. But really, it felt like this sort of mystical thing off to the side. And stock markets weren't really a place where you were making money as an active day trader anymore for most people. And, I'm always interested in how much of a pattern and a demand has to do with not necessarily kind of crypto or the asset itself, but a much deeper desire to just sort of, have another thing that gets us out of the doldrums of normal life. And, and I think it'll be interesting to see if that's the case, where that energy goes in a world where there aren't ICOs. And, will there be something to come capture it,
I think that's a good point too, and it's like I think a lot of people saw the Ethereum crowd sales and the other early ICOs, saw the incredible returns, And it is kind of funny because especially the early ones, like it really did. The narrative was like democratizing VC and like really democratizing returns for a lot of these like investors. But at the same point in time, I feel like a lot of people, and I've gotten into like arguments with people about, yes, it did like democratize venture capital in some cases, but especially like recently, like venture capital has incredibly high rates of return and then can go to zero pretty quickly as well. And there's a lot of like retail investors that did not take into account the fact that you could lose 90% or whatever it might be on some of these investments, and it democratized in a good way. And also you got the full spectrum of it, which is kind of funny. And I think people just hear stories of their friends or whoever it is, and I think that kind of was one of the big catalysts for 2017 is, my friend invested in this ICO and made 20x on $1,000, and that just snowballs.
I mean, I think there's a risk when you have something that literally can trade like a stock and has the barriers of entry of just giving you $1, and it's something that you can lose 90% of your money on. I mean, it's liquid venture capital.
Or 99%.
Or 99%.
99.9.
I mean, the break-even multiplier on on-chain FX is probably one of the greatest tools I've ever seen.
All right, well, you guys are at a party, so I don't want to keep you for long, but a thing I'm starting to do, which I really think is interesting, is asking everyone as we kind of close out, what do you think we're going to be talking about a month from now? Or whatever period, but some point in the future. What are emerging narratives that you're interested in? What are things that we're not talking about yet that we should be? Where are we talking? What are we talking about in a month? We'll just go around the circle, maybe starting with you, Rocco.
What are we talking about in a month? I think honestly, in my opinion, in a month, we're talking about more Lightning infrastructure being built. We're talking more about block streams, Liquid. We're talking about Bitcoin infrastructure. Honestly, I think in a month from now, I think that's going to take control of the narrative for a little bit. As I don't know where the market's going to go, but if there is a period of kind of revival or even down, like either way, I think Bitcoin is still going to be the pervasive narrative of talking about, layer 2 solutions and scaling. Bitcoin's
Love it. Larry, what do you got?
It's a tough question, but I mean, with the one thing that comes to my mind with the recent Facebook hack, I think we're going to see more discussion about decentralized sovereign identity. I think if people can be the owners of their own identity and basically be in control of the data that they share with people, I think that's a really, really powerful use case of blockchain that I think is not talked about enough. I think Sovereign is doing a really good job in this area. There's a lot of good decentralized open source development in here that can help with decentralized hacks. Because whenever you have these large institutions, they become honeypots for hackers because they just simply hold too much data, and it's very tempting for the hackers. But if we move to an infrastructure where each person holds their own identity and basically chooses to share the data that they own with, I think that's really powerful, and I think it's going to become an interesting use case in the future.
So for me, I think a little bit about, broader privacy. So I get the data component. The thing that I'm hesitant about with data privacy is, I agree there'll be a thing we'll be talking about. I don't think next month somebody's going to come up with a database solution.
100%.
But I think that broader privacy and people starting to look at privacy as more than just a binary. I think I said this earlier, but I think that people who look at crypto, think this is like private or for having more conversations about different developments, whether it's data privacy or transactional privacy.
I really hope it's what I said earlier. If we get the Bitcoin infrastructure built out, that would be great. But I'm worried that we're just going to keep focusing on the next platform that gets institutions on board, whatever that means. But really, there's so much work to be done to get Annie Mae out in Iowa to buy her first Bitcoin. And hopefully, since I feel like those stories and those developments have sort of fallen to the wayside over the past year. We're just so caught up on the ETF and on synthetic derivatives that really, at the end of the day, do not translate into adoption. And so I hope that we see developments there, but I'm not entirely sure. I'm not the best prognosticator.
So we got a hopeful there's adoption story.
Yes.
Bobby, you have one additional question from the Peanut Gallery. Ryan Selkis also insists that I ask if you've gotten your buffalo chicken fix at the party.
There was not buffalo chicken. I'm gonna have to take that up with Judas. That's a little bit unacceptable. He knew I was coming and invited me here. So yeah, maybe my prediction for next month is the next block happy hour they do. They'll actually have buffalo. I'm bitching about it on YouTube.
And a blue cheese fountain.
Yes, please. Blue cheese over ranch.
There you go.
Wait, do you have a real answer? Just because I'm interested.
No real answers. I'm sure you guys covered it. I didn't get a chance to watch the earlier part, but I think at least one thing, like narrative-wise, the next month I'm interested in seeing is like how these utility tokens may or may not actually figure out utility, because I think nobody really has figured that out yet. And I know the conversation earlier was kind of about the utility tokens, and now some of these tokens are maybe transferring to security tokens, which I think will continue to happen, or just pulling their token off the market. Or I think, maybe even the worst case, just kind of pretending like they're working on something and letting it ride off into the sunset, which I think is probably happening quite a bit. So I am kind of curious. I do think that there are a lot of teams that maybe raised money and didn't necessarily have bad intentions, but got caught up in like the payment token hype or cycle or whatever, and are now trying to figure out how the hell do we have value accrue in this token. So that's kind of one thing I'm curious to seeing, if that's with governance, which I'm kind of doubtful of, or if it's some other type of mechanism that somebody like Rocco is working on. I don't know. But that's what I'm curious in watching the next month, because I do think that's going to continue to accelerate in terms of the narrative.
My personal favorite quote from that article was some of the the Bitcoin guys were saying 4 down, thousands to go. And honestly, I would love this kind of like raised earth scenario of a lot of these tokens in 2017, like having this conversion, because it would make an interesting narrative for the next month.
All right. Well, we are in transitional times, it sounds like. You guys are awesome. Thank you so much for taking some time out from this party and joining. This is great. I hope you guys stick around and get to have actual fun.
Thank you.
Awesome. See you guys.